Good morning, ladies and gentlemen. Good morning, colleagues. Glad to be here today. And this is the post-MPC meeting press conference. As you know, we had the MPC meeting yesterday, and you already have seen the decision and indeed the press release that was issued at the end of that meeting. And today, as usual, I want to cover in some detail some of the issues that came up and give you a bit of color, not only to the decision, but also to the background of what happened in the discussion. The first element to make, or the first point to make, is that inflation remains below the midpoint of our target range. And you are familiar with our target range. It is 5 plus or minus 2.5%. And actually in June, the most recent number was June, and the inflation that was recorded then was 4.3%. And we expect today to see the new released number. We still haven't seen it, of course. It will be released hopefully later this morning. Or early this afternoon, and we'll see what the answer is then. But the point again is we expect it to be around where the June number was, because expectations, inflation expectations are well anchored. Food inflation has been falling. Actually, food prices have been falling, and fear inflation has been rising at a decreasing rate. I think some time ago, actually the last two meetings, we have mentioned that the price of oil, international price of oil, the global prices have been rising gradually in line with, say, developments in the political developments in some of the producing nations and so forth. So our price inflation has kept up with that, or rather fuel inflation has risen as well, but also because of domestic things related to charcoal prices, meaning logging, the ban on logging, and so forth, as you know, a few months ago. Nevertheless, non-food inflation has been falling. Rather, non-fuel remains low, and the 3-month annualized rates have been falling. So it confirms a favorable position with regard to inflation. Now, we should also add that, yes, the minister announced, the cabinet secretary, when he read the budget speech in June, he announced an increase, or we expect an increase in excise taxes. Now, I'm not sure if those were announced then, but they're indexed, so they're expected to move. The impact of increase in excise taxes due to the indexation. And we expect that would contribute something like 0.37 percentage points to inflation going forward. So 0.37 percentage points. So what about on the output side? The most recent numbers actually are the Q1 data, actual data, and this showed a growth rate of 5.7%, largely supported by a strong recovery in agriculture and resilience of the services sector. What is clear is that there is a very strong positive sentiment that has been sustained. We talked about it the last 3 meetings, actually. And I think this has been confirmed first by the market perception survey, which shows the optimism has been sustained. Also, in particular, we see significant optimism in a few key sectors: manufacturing, tourism, and transportation. All these respondents in these sectors showed significant increases in, or expectation of large increases in growth, also due to favorable sentiments or favorable outcomes in their sectors. Now, on the whole, respondents, talking about optimism, respondents tied this to a rebound in agriculture, completion of key infrastructure projects, focus on the Big Four agenda, very strong forward bookings in hotels, and among others also stable macroeconomic environment. All those have led the respondents, indeed consumers and investors, to have a very favorable outlook in the prospects of the economy. At the same time, we know we are connected with other countries, other economies, and currently we are seeing a very favorable global economic outlook. So the world economy seems to be in a good place. This, however, there are also risks that the global economy is running, as we know. And those risks are significant, but they haven't yet materialized. So, for instance, the issue of the trade wars. Now, it's true the trade wars have started, but you could say that they are still in round one of the trade war. And we hope that the war will cease quickly, because there won't be any winners in trade wars. Everybody loses. In the short run, it appears that people will win, but in the long run, we know that everybody loses when from a trade war. That being the case, that is a significant risk. There are also other risks in terms of the unwinding of the timing of the unwinding of the UMPs, the unconventional monetary policy, i.e. the hiking of interest rates in the advanced economies and things like that. Nevertheless, we have very good outcomes. Global growth is expected to be around 3.9% in 2018 and 2019, and it is the first time would have such numbers in a long time. As an aside, a few days ago, the Secretary of Treasury, the U.S. Secretary of Treasury, was quoted as saying that, talking quite favorably about the economy, this is on the back of very recent outcomes that were, or announcements of data, and he was talking of, this may continue for another 3 or 4 years, this sort of favorable, well, that is him speaking and being reported. Okay, so what do we expect for 2018? 2018, we have recalculated our projections, and we have come up with a number expecting us to grow by 6.2% in 2018. This is confirming, or rather this is using all the recent data, including the Q1 data, and also using the information, all the information we have in terms of the global economy and indeed other developments in the domestically. I want to say a couple of things about the external sector. We've noted that agricultural exports have been quite resilient. They're resilient. Their performance have been quite strong. And in particular, tea, horticultural exports, these are fresh vegetables, fruits and nuts and cut flowers. All those have been growing quite strongly. It is true the tea prices have been worse than last year, but the volumes have been much better because of the favorable weather. Now, I also mentioned the oil prices, the international oil prices, and that those would tend to, I expected to increase. They are high relative to last year, but also they're expected to move up marginally. But that being the case, we have also seen lower food imports post the imports that we had last year, drought imports, if you remember. And also SGI imports are more muted. I thought that this had to do with the timing of the projects and things like that, until somebody mentioned that actually we expect imports to be less broadly I'm talking of compared to the past, because such things like the rolling stock, you're not going to buy, you're not going to import more rolling stock, locomotives and things like that. It's the same locomotives that will be running up and down the SGR. Well, maybe just the short SGR to Nairobi or the longer SGR to Nakuru or wherever else it's going to terminate. So on the whole, the higher prices, higher oil prices have been more than offset by the lower food prices and indeed SGR food imports and also imports of SGR equipment. Remittances have also been very good, very strong. And actually, these are from 1 month to the next. They've just gone from one record to another. And we ask ourselves, why is this? I mean, isn't there a sort of a seasonal pattern in this and so forth? And actually, there are three reasons for the stronger, or let's say the very strong outcome of remittances. First, of course, is the global economy is doing better, meaning our Kenyans, wherever they are around the world, they are not jobless, right? I'm talking of this relative to how things were, say, at the beginning of or the onset of the global financial crisis. So the global economy obviously is strong. Then also what has happened is our fellow, the diaspora, have had very strong positive sentiments on the economy. This is important to note. They are like everyone else, and they have a strong, they are connected to Kenya, and they want to invest in Kenya, and so they are, like all other investors, have a need, and therefore increasing their position. Now, the investments could be building a house, in addition to even paying school fees and all that, but also other things, like others. There are a lot of investments, as we know, including in our stock exchange. The third factor is that a lot of the institutions, banks, have introduced new products targeted to the diaspora, targeting the diaspora. And these products actually have been very effective. We've looked at the numbers, and indeed, this is one of the things that I think shows that if you set your mind to doing something, you can actually achieve something well. The diaspora have responded favorably, and consequently, the numbers in terms of remittances have been that much higher. So that said, the current account was recorded, to June, was recorded at about 5.8% of GDP. And this is the current account deficit. And we expect the deficit to fall for the year to 2018 to 5.4% of GDP. Reserves remain high, 8.8 billion US dollars, equivalent to 5.9 months of imports, as was indicated in the press release. I should say that there is one issue about the numbers, and this is the GDP numbers. When you calculate things as a percentage of GDP, obviously the nominal GDP number, the estimate of that is important. And I'm saying that because we know that the last time I talked about the deflator, the GDP deflator in the 2017 numbers, which in itself was suspect, and we've talked to KNBS, and they are in the process of revising that number based on the data as they saw it and correcting any mistakes in their worksheets. So just a footnote, as it were, in terms of ratios that are percentage of GDP. Last point on banking sector. The banking sector remains stable and resilient, both in terms of, and indicators there, capital and liquidity. All those seem to be adequate. And NPLs fell to 12%, and this is the ratio of NPLs to gross loans. This fell to 12% in June from 12.4% in April. If you remember, this had increased, and now we have turned the corner and it's beginning to come down. Now, this is really attributed, or this decline is attributed to enhanced collection efforts by commercial banks. And they fell in, sectors that are important to note where this happened, where the NPLs fell. One indicated these were transport and communication, personal household, building and construction, mining and quarrying, and tourism. These sectors, we saw significant declines in their NPLs. Now, we did the CBK survey on NPLs. I think we mentioned it last time that we were going to conduct this survey. And we did conduct it, and it confirmed the reasons which were indicated in the press release, the reasons for the NPLs. And I think that is well adequate. The point is that the trend we expect the trend decline to continue. So in the next few months, we expect the benefits of enhanced collection efforts to be manifested in lowering in the NPLs. At the same time, we need to be watchful in terms of new loans so as not to generate new NPLs from that side. I will also say that the credit survey that we do every 2 months, the one we did in June, showed expectations by the credit officers that NPLs in the next quarter, that is in Q3, which we are in now, will fall or will continue to fall due to the strong collection efforts. So in that sense, we see the benefits of, we expect to see the benefits of the enhanced collection efforts. Private sector credit growth, this has moved up a little, and you remember this was something that was of some concern to all of us, and this has gone up to 4.3%. Still nowhere near where we expect it to be. At the end of the year, we hope it to be somewhere in the order of 7.3%, around 7%. But now it's at 4.3, but it's moving in the right direction. The sectors that we saw strong growth in private sector credit, these were manufacturing, building and construction, and trade. So those sectors, at least those ones, there was strong credit growth. We expect this to continue, as I say, and at the same time, the banks and indeed credit officers will maintain watch in terms of the quality of those loans. So indeed, the credit standards should not drop. They should maintain their credit standards so as to ensure that we don't have a run-up of new NPLs. So that's really where we are in terms of those. That was the background. I should also say that as was mentioned in the press release, the MPC committee saw that there was still some scope for accommodative policy. So taking a step in terms of towards being more accommodative. And this is against the risk of having had, against the risk of having perverse reaction to it. We explained last time what we mean by perverse reaction in terms of the policy that when you actually lower the interest rates, as we did in the CBR rate, but that leads to a sort of a tightening in credit rather than a loosening in credit. So that risk remains, but on balance, the MPC decided to lower the CBR rate by 50 basis points, and then to continue monitoring and also, well, not just the result of this, but also other outcomes, and stands ready to take further action, whatever is needed to maintain the economy in sort of an even keel. So what's the bottom line, colleagues? The bottom line is that we are, as we had said in January, we have a very favorable outlook for the economy at this moment. And this is a confluence of factors, of positive factors. And the point here is that we should not squander or waste this opportunity, the opportunity that we see. However, we need to be mindful of the risks, continue to be mindful of the risks, and stand ready to take any action that may lead to, if we see an emergence of a situation where that may jeopardize the favorable outlook, or for that matter, more immediate problems that may be seeping into the economy. So we need to stand ready to deal with those risks as they come. That's all I had for my presentation, and I'm now open to your questions.
The current account deficit, you said it's going to go down to 5.4% of GDP in the end of the year. I don't think I might have been distracted, but I don't think I had the reason for that. And then the next one, this might be slightly out of the central bank remit, but the Treasury wants to do private placement of bonds. I don't know whether you have any comments around that, how to impact the usual auction programs and that kind of thing. If you have any comments around that, thank you.
My name is Njoroge, representing Radio Citizen, and my question is on private sector credit access. And you spoke of being mindful to all sectors of the economy as you consider, the monetary policy decision that you make. But again, the Kenya Bankers Association is arguing that as much as you set the base law for credit to be accessed by private sector individuals, then the access is only limited to only those entities whose risk is only can be rated at 4% above the base rate, which is now at 9%. So only those who are able to access credit at 13%, and they still argue that this is locking out SMEs and other individuals from accessing credit. And how would you respond to that in terms of credit access? Are we locking out a section of the economy only to feed the rest? That's my question.
Last MPC, when you were here, you talked about the NY scandal, and you said the first phase was to target individuals, and the second phase was to target banks that aided that. Maybe an update on that too. Thanks.
Just wanted to get what are the progress of the IBL extension of receivership, because the month is only today. And then we have seen reports where CMAs is taking action against CBK for their cookie book sale in 2015. Was there any action taken by CBK against the same bank? And then finally, we have noticed in your numbers that there's been also a slow growth in demand deposits. We also have a problem with that, as I said, for banks as a point of concern.
Duncan had a question about the current account for 2018. Why is it expected to come down by 5 to 5.4% of GDP? I think you are distracted, Duncan. That's okay. Yeah, actually, I did not explain it to the end. I left it hanging. So you are right. First, we expect exports to continue to perform well. I already talked about the favorable developments in the export sector. I talked about agricultural export, that is, tea, horticulture, and so forth. Secondly, we expect a sort of a moderation in imports. And I think the issue there relates to last year, for instance. Last year we had unusual imports related to the drought and also other security-related things. So those are two key factors that will not be present this year. And then we expect, obviously, remittances to continue to do well, and also other things like freight actually also is doing well. So that's the basis of the strengthening in the current account. And thanks for raising the issue about the current account, because frankly, If you look at where the current account is now, that is where we expect it to be in the long term, meaning it to be around 5% of GDP. That's where we expect it to be in the long term. So you could say that, in a sense, we are having a soft landing of the current account. And today, that will allow us to have it has allowed us to have a very balanced market in the foreign exchange. So for instance, from a day-to-day basis, the flows are quite even. And that's why the exchange rate has remained has not moved by much. I would rather put it that way. I hasten to add that our our exchange rate policy has remained the same. And just to remind others who may have forgotten this, our exchange rate policy is simply that we have a flexible exchange rate, and we only intervene to minimize volatility. We know volatility can be quite destructive to the economy, and that's why we intervene, but we do not have a direction, we do not have a target level or any of those. We have a flexible exchange rate. So thank you for asking that question. You asked the matter about private placement of bonds. I think I would say here, I don't want to speak too much into this because I think the matter is still in very, very preliminary stage. The point, nevertheless, is that obviously we are the fiscal, we serve as a fiscal agent and an advisor to the government, so we will weigh in with them at the right time. The point here is always to make sure that the way we borrow from the market is not in any way, let's say, destructive, right, to the market and other elements in the market. And that requires a lot of things, including transparency, including predictability, and also it means presenting material or presenting instruments that that investors understand. So I'll just make the point and understand in the sense of they can use it for their own investment purposes. I mean, there's no point, for instance, in holding an instrument that you cannot sell in the market. Or for that matter, something that is opaque in terms of pricing and all those other things. All those are a lot of considerations that need to be dealt with. So I would just say that the matter is very preliminary, and we can leave it as that. Is that okay? Thank you. I didn't get your name, but you're from Radio Citizen. I think it's the first time you've been here, right? Okay, I didn't get your name. Okay. Okay, so you're talking about, you asked a question about access to credit, and it is true, this is a concern for us, meaning there are sectors, there are pockets in our economy that are not getting credit. That is true. We don't need KBA to tell us that. We are the authority, not KBA. That's an aside, right? But it is true. As a matter of fact, just to give you concrete information about this, we have been quite vocal about the interest rate caps, meaning against it, because we believe and we have data, we've shown that actually, despite the intention was actually, as explained, as stated at the beginning, was to allow greater access, right? Greater access at affordable prices to all sectors of the economy. What has happened, on the other hand, is that, yes, let's say the corporate sector has access to credit at pretty good prices, right? At pretty good rates. However, the sectors that you mentioned, SMEs, small institutions or new institutions, and others, have actually suffered quite a bit. They've not had access, they've not been having the access that maybe they had before. So you want to even, maybe you have a loan, and you want to go and expand, to sort of increase the loan size to something else, and you won't get that, or you need a new loan, and you won't get that. So it doesn't matter, you are shut out. This is really what we talked about. And I think this is why I would need, I mean, you talk to the people, I mean, not just the governor, right? Talk to the SMEs. They're hurting. They're hurting. And the only option they have is to go to the Shylocks. And you know what that becomes, right? That's a major social issue. I think you understand what I mean by that, because when the man cannot, or the entrepreneur cannot repay, you know the consequences are really dire. So I'm just making the point, this is why we have been so clear about where we stand on the interest rate caps. Now, you already know that the proposal has been tabled in Parliament and will be discussed by Parliament in the next few weeks. And I think this is something that we are obviously going to be part of as a country and as the central bank. There are questions about the IMF facility. Okay, just to explain it, it's true. The arrangement was extended to, I believe it is to September, if I'm not mistaken. September 12th, September 13th, I think it is. And the point there is that, yes, it has allowed us to do some things. I'm talking of put in place policies and so forth, including the new budget and all those other things. And at this moment, the IMF is in town, and they are reviewing our performance. And we'll see what they come up with. So I cannot predict one way or the other. Obviously, we are confident that at least in terms of our objectives, those will be met. But I think I should hasten to add, and I'm answering this question not because you raised it, but because there has been questions about it in the, definitely not in the Star, and maybe even in the Star. The point here is about whether we need the resources or not. And I would add that at this moment, we have 8.8 billion in US dollars. That is our first line of defense. The second line of defense would be the equivalent of insurance. We call this the insurance. This is our insurance, right? And that is the precautionary resources that are available. Obviously, they will be available under certain constraints. If certain things happen, there is conditionality there. So we are not saying that at every single point the money is available. But obviously, we will do what it needs to be done to make them available. That's our second line of defense. And there are other lines of defense, as you know. But I just wanted to make the point that at this point, we don't, quote unquote, need the money from that perspective. So, I mean, we have 5.9 months of import cover. So we are pretty comfortable in that sense. But yes, it's important for us to do what we have, that we want to do in terms of strengthening the economy and so forth. You asked about the NYS2. It's true, when we met, I think it was 2 months ago, even before, I'm not sure, I think it's 2 months ago. I made it very clear that Central Bank is working with other investigative agencies on this particular question. And we have continued to do that. So at this point, the investigations have proceeded well, and you'll be hearing about it as the investigations are concluded. But at this point, I wouldn't want to say much more. Lest I jeopardize I speak out of turn, and then we'll have to apologize after having jeopardized the entire investigation. I don't think we want to risk that. Yeah. But take comfort that the investigations are continuing, and will be concluded, and you'll be told when they are concluded, and it will be quite public, I'm sure, and I hope it will be soon. Then Tieto asked about progress on IBL. All I can say is that there are 2 points I would make here. First is that we have had very good, well, why is IBL generally? IBL is, and this is Imperial Bank, sorry, Imperial Bank under receivership. That's That's what this is about. We have had a proposal from one bidder, and the bidder is KCB. We actually put out a press release recently on that matter. And we intend to continue working with them so that we can have a solution that is befitting of the depositors. We had a meeting with depositors last Thursday, I believe it was, last Thursday. And we explained this matter to them. And explained to them that, among other things, we do need an extension of the receivership. And yes, the receivership, as per decisions before, would end today. But our view is that we can get, and this is what we are doing, we are working with all concerned parties to have an extension of the receivership. And we are quite confident that that will happen. So I want to leave that there. You talked about CMA and their decisions against NBK. I don't remember everything about this perfectly, but I would ask you to go back in 2015, 2016, because we actually even had press releases about this, that we had actually investigated this matter and come up with a way forward. I don't want to explain what the way forward is because now I haven't read that press release at this moment. So please go check it. It's there. And I don't know what else to say. But yeah, the point is that we are clear on what our mandates are, and we followed our mandate, and we did that. There's a press release that details all that. Last point was the slow growth of demand deposits. I don't know what the slow growth in. I actually thought demand deposits have been rising sharply, but maybe you talk to our economists. Maybe my calculator is wrong, but I'm not concerned. We are not too worried about the deposits. As a matter of fact, this is part of the. I mean, these have been going well as far as I know, but maybe I should check again.
I have two questions. One is on the issue of the Financial Markets Conduct Bill 2018. What is its fate, and have you resolved the differences or the opposition that you had to it with the Treasury? Then secondly is on the issue of the rate cap. Given that the economy in the first quarter grew by 5.7%, and you're saying that we are on target to grow by 6.2%, is it then to say that part of the impact of the rate cap is not as significant as would be expected, given that the economy is still well and healthy and going towards hitting the targets that you had proposed?
One is in relation to, is the government broke? I ask this because we are actually gathering some reports from Parliament in relation to committees not being able to get funds for them to do retreats. So we just want to understand what could be happening from where you sit. I don't know if you might be able to respond to this or not. And my second question is in relation to the credit issues in the country. Right now, you've talked about private sector credit to grow by about 4.3%. Do you think with the tinkering of the rate cap and eventually, if it goes through and it is scrapped, will it sort of accelerate this in the coming months? Thank you.
One, do you still see scope for accommodative policy to still ease the rate, and if so, what informs that? Secondly, you've given the growth targets, you've revised that to 6.2, you're earlier given 6.3. Could you just explain what explains the trimming? And then on the reopening of Chase Bank, could you give how much in liquidity support CBK will be giving SBM on the day the bank reopens, just in case everyone comes to collect their money? And then lastly, what are the enforcement actions that the CBK is taking against some Tier 2 and Tier 3 banks that are controlled by one individual, which is in disregard to the prudential guidelines on ownership limits?
Just I wanted you to speak to whether you see any impact of the component of the dollar inflows from the tax amnesty.
Thanks, Brian. Maybe we begin with Brian's question. Thank you. Actually, we've been monitoring the inflows, as you can imagine, and we monitor. We actually are quite granular in terms of monitoring. So I don't want to say beyond that, but I want you to appreciate that we are not monitoring at a very high level, 30,000 foot. No, we are actually in the weeds on a day-to-day basis. So we can tell you how much came yesterday, for instance. And actually it isn't yesterday. I can tell you what happened the day before yesterday. By evening, I'll tell you what happened yesterday. You understand, right? I can only say that we have not seen such large flows that we can not ascribe to other things that are going on in the economy. So this idea that the amnesty has led to huge inflows, I don't know what the basis is. We have not, definitely we haven't seen it in the flows. And I think I just wanted to assure you that we've been looking for it, particularly because there's been pronouncements that it has been very successful, whatever that means. I hope that settles your question. Then we go back to Abiel's questions. Scope of further accommodative monetary policy, well, I guess we wait until the next MPC meeting, and then they'll see. I think the point here is that we cannot anticipate MPC's action and decision. Maybe there will be, maybe there won't be. So let's wait. But I think we have to take comfort that the MPC took a decision that they thought was appropriate in the circumstances and with the data that was available to them. And as I explained, there are also other sides to it, meaning the risk for a perverse action, perverse outcome. So I would rather we wait on that. On the 6.3 trimming to 6.2, maybe I'll just pass on that. Frankly, I don't see this as significant change. So, yeah, let's just leave it. On the SBM liquidity support, I would make a simple point here, which is I don't think the issue is liquidity support or not. The issue is one of confidence. How much confidence is there when that happens? And this, I think, is much more important than liquidity support and all that. And I would just add here, in terms of specifics, we'll provide as much support to this bank or any other bank as we do. So there's nothing special about SBM before, during, and after. There's nothing special about any other bank. So it will get the same support, the same, let's say, treatment as any other bank in our jurisdiction. Enforcement actions. I think the enforcement actions do take place all the time. I don't think there's anything I need to add here. But I think also occasionally you do have, because of specific considerations, I'm talking of, for instance, if there's a merger or things like that, where the appropriate institution is given time. You could think, for instance, as happened when we put in place the law, I mean, when we increased the capital requirements, meaning we asked for the 2.5%, is it 2.5 or 2? Who is it? 2%, that buffer, right, the capital buffer. We gave them some time to increase this. So I think the point I'm making is that even as we enforce, we are also conscious of that you can't push on a string, in a manner of speaking. And when we put measures in place, yes, they're given appropriate time that we think is appropriate to achieve those targets. On other matters, maybe we go to Abidina's question on is the government broke? That was what you asked. I would suggest that maybe you need an appointment with the CS or the PS, and I think he would accommodate your question, and I'm sure he's the best person to talk to on this matter. But I would also add that they are very early on in the budget cycle, right? I mean, they have actually the question I would have to you is, has the budget been approved by Parliament? I don't know. So there are considerations there that you may, I think, would be best directed to the office next door, right? In terms of private sector credit, that's actually a perceptive question. 4.3 is what we have now, and I said that we expect it to grow to 7%. But if you remember, and while you are asking the question, I tried to look at the history, the growth in public sector credit, it actually was much higher. It used to be in the 20% range, right? And that has come down from, I think, 2015, 2016 to where we are now. I'm talking of the financial year 2015, 2016, to where we are now. So the point is, yes, there is scope to improve, but I think we did make the point that the reduction in growth was not all due to interest rate cuts. It was also due to other factors. And therein lies our interest to make sure, our concern, to make sure that actually other factors are mitigated appropriately. We have credit going exactly where it's needed, providing capital to much needed projects and things like that. A point I would add, this you didn't ask, but I think it is important to underscore the granularity of this credit growth. Meaning there are some sectors that don't get that much credit. Agriculture, for instance. Agriculture gets something in the order of what, 4% of total credit, even though it accounts for more than a quarter of our GDP. And manufacturing, on the other hand, is really needs a lot of, or actually gets a lot of credit. Other sectors that get a lot of credit include trade, and one can understand why. But I'm just making the point, particularly even today when I was talking about those sectors, I did flag them precisely for that reason, because it's important to flag to understand the granularity in terms of the sectors and so forth. So thanks for asking that question. Then there was Alex's question to finish this. The market conduct bill. We are still, our concerns about it remain. There hasn't been any, I mean, clearly this bill will need to be, let's say, ventilated or to be dealt with in a much more comprehensive fashion before it sees the light of day. So my concerns at the beginning that I raised last time still remain. I will ask Warui who was very concerned about my issues about Subarus. So the Subaru question still remains. So it remains a Subaru in many ways. It needs to be dealt with appropriately. And so I'm very clear about that, right? And we continue to be very clear about that. And the core issues need to be dealt with. Last point was about the impact of interest rate cuts. I think, Alex, you asked the question quite well. So we are growing we expect to grow at 6.2%, and in the recent number, Q1 was also quite strong. So what else? The question, Alex, is the counterfactual. And I made this point last time. I talked, in January when we met. When we met in January 2018 after the MPC, I talked of a very favorable outlook, talking about a confluence of factors. And at that point, I said that what do you need to get a perfect storm? I asked that question. And we talked about the positive supportive policies that we would need in order to get a perfect storm. Remember, even then we were talking 6.3. And one of the elements here was this thing of removal of interest rate caps. At that point, we talked of it as acting as a brake, and I'm reading my notes here, acting as a brake to the economy. And I gave the example of driving around with the handbrake on. You can see I like car analogies. That's another matter, right? In any event, so the point here is that the counterfactual, if we didn't have the interest rate caps, the sky is the limit. We'll be growing at much faster, much faster. And that is really as a consequence of the very favorable conditions and also the very strong macro framework and all the other things. The private sector is quite robust. I mean, we are ready to go. So I think this is why we are anxious to get those factors behind us so that we can actually put the economy where it needs to be. So thank you for asking that question, Alex.
2 months ago, you raised the question of slimming headroom in regards to public debt. But then again, there's this blanket freeze or new projects coming from the executive. So I'd like to know what do you think that will have on the second half of the year growth? And do you think it should be specific? And then 2 is on receivership. I think we received a press release concerning the acquisition of Chase Bank. To what extent do you think receiver managers should access the systems so that they do not benefit from trade secrets from a company that is being liquidated or being revived? To what extent do you sort of manage those aspects?
We saw the board, the trustees from Chase Bank called for a meeting just 3 days before we conclude the bid for SPA purchase. Do you think that has any risk on whether we'll be able to get it approved? And then secondly, we have had a lot of hints that there are a number of mergers and acquisitions in the market, in the banking sector. Can you tell us how many applications you have received?
Latest numbers will be net borrowing, net domestic borrowing and overall borrowing position as at the end of the financial year and the latest numbers.
Hebling's question, net domestic borrowing at the end of year, last year. I don't have it here, so I cannot give you, but for the year, I'm sorry I didn't bring my notes. I could have brought it if I had anticipated. So I apologize for that. But for the year that has just opened, by the way, I take your question to be net domestic borrowing related to, you're talking about the fiscal net domestic borrowing. Okay. The only point there is, remember, net domestic borrowing is not the same as what we, well, let's leave the complications. I don't want to complicate matters. Yeah? I'm sorry, I was sliding down this path, of detail and becoming an economist for once, right? So, but we then expect to hear from the National Treasury once their numbers have been firmed up, including their fiscal numbers, and that's when we'll get a proper confirmation of the net domestic borrowing for this. So we are waiting for that. But we don't expect that to be any significantly different from, say, what is now was in the budget statement and things like that, but we'll wait for that, okay? Again, you can see me sliding back into a different corner, so sorry about that. Ronald asked, well, first there was the issue about acquisitions, right? At this point, I don't think I would want to discuss who or how many or those sort of details, because things are still operating. And from their perspective, maybe, meaning if you have an institution that wants to acquire, merger and or acquire another institution, at this point the conversations would still be very, very confidential. And they too have certain governance structures that they have to go through, including their board and so forth, and their shareholders. So we do need to respect that. So, so I want to respect that and leave it as that. But I would throw out to you that the point that a few years ago, maybe 2 years ago, we did make the point that we expect that there would be some sort of consolidation in the system, and we talked about natural consolidation. I hope you've seen that that is happening, and as opposed to the sort of forced consolidation that maybe we had, some were proposing. We, on the other hand, preferred and followed and supported or continue to support the natural consolidation, which I think is bearing fruit. Ronald was asking about headwinds with regard to public debt. Yeah, those remain. The numbers may change a little, but we still have limited headroom, which this is what I've been repeating again and again, and for debt. And therefore, we need to look for other non-debt sources of financing for projects and things like that. Will the new let's say, directive, presidential directive, affect or in some way strengthen this public debt? Of course it would. If there is if indeed the borrowing is maybe a backtrack. We talked about sources of financing, right? Last time when we have discussed this issue. But we also talked about things in terms of project preparation. So maybe this will help. This new directive will help because it requires the old projects to be dealt with instead of rushing around with new projects that are probably not very well prepared and things like that. I think in all these things, it's not rocket science. The project may be rockets, but on the other hand, it's not rocket science to build them. So I think we have to support what is going on. So thank you for that, for asking that question, because it really helped me to sort of bring that out, an element that I obviously wasn't going to talk about. You asked a question about receiver managers and what constraints they have and so forth. They go under the same constraints as any of us in terms of conflicts of interest, in terms of, and all those other things. So they don't have a lower bar. As a matter of fact, they have a very high bar in terms of conflict of interest, precisely for that. The same sort of conflict of interest test that I have to undergo, or any one of us in the central bank has to undergo. Because yes, you are privy to valuable information, and you are obliged to keep it confidential and not to benefit, not to use it to your benefit. So I think those points are very clear, and we insist that that remain and should be the case. Okay. I think haven't I finished? No, there was another question, right? Chase what? Oh, the chase bond, yes, DG. I don't think I want to say much about that because, frankly, as we have said before, there are a lot of, my analogy, now I'm deviating from cars, right? You could think of a boat that is in the ocean that is being tossed around by the waves and things. That's really how these receiverships have been. We have really tried to have to make a straight run to port, but we keep being pushed one way or the other. I cannot tell you what will come to us tomorrow, what wave will crash on in our ship tomorrow or whatever. But I think the point here is that we are completely clear in terms of following the law. We are following the law 100%. We are following the law for a particular objective, and the objective here is for the greater benefit of depositors, creditors, and indeed stability of the financial system. All those actually are part of the equation. They are all part of the equation. So the point for us is we have to continue to achieve the end product. And I think so far there has been, despite being pushed around, for instance, when we chatted with the depositors on Thursday, despite them being kept away from their resources for so long, they still believe that we were following the right path, and they have our assurance that we will continue to do that. That is our responsibility. So I hope that answers your question. I think I've answered all questions.
I believe so.
Yeah.
Thank you, everyone. Thank Governor. As usual, we'll have the Governor, the Deputy Governor, and the rest of the get up to first, and we can then finish up. So thank you.
Thank you.
Thank you.
VWs or Subarus? Yes,